This is the best booming crash trading strategy that you can use right now and start making some profits. As you can see, we managed to make close to $200 in one single trade using this simple strategy that I'm about to show you. All you have to have is your phone and some internet, and you will be able to trade booming crash successfully. All the tools that I'm going to share with you today are available for you. So all you have to do is to follow the simple instructions that I'm going to show you. So let's head straight to this chart and see exactly how I managed to make this $200 in one single day. I'll also be giving away a VIP spot, so watch up until the end and see exactly how you can win a spot in our VIP signals group. Okay, now I've opened up my charts and I was using this simple tool to find these turning points in the market, and I was capitalizing on that. So the tool that I was using is called the retracement level. It's called the Fibonacci retracement level, and basically it looks like what you see on the screen right there. So we've got this level 100, this level 78.6, we've got level 61.8 and level 50, and also have level 25, level 0, level minus 7.6, and level minus 61.8. And basically, these are called Fibonacci retracement levels. And this tool is used to be able to find where exactly the market is going to turn. I'm going to show you very soon how we can use this tool to find exactly where the market is going to turn. So this tool is actually available on all the trading platforms that you have, whether you're trading on your phone, on your computer, or on your iPad. Wherever you are trading, you'll be able to find this tool. And this tool is a price action tool that uses mathematical numbers to find where the market is most likely going to turn. So it's called the Fibonacci retracement tool, and this is what I was using to find turning points in the market. So first of all, I want us to set up this indicator. So I'm gonna hold it, and we're going to go through some properties for this indicator. You're going to need these key important levels on your chart. You're going to need a level 0, okay, which is 0, 0. You're going to need level 25. You're going to need level 78.6, then level 50, then level 61.8, then level 100, and you're going to need to add level minus 27.6 and minus 61.8. These are the levels that you're going to need. And to your right side, they are simply in decimal form. So you can see 25 is 0.23. Actually, it's supposed to be 0.25, right? And you can see that 78 is 0.786, and the 50% is 0.5, right? And 1 is 100. So these are percentages. And what we're simply saying is in order to use this tool, we are saying you first have to identify the market structure. So we want to identify whether you're in an uptrend structure or in a downtrend structure. And once you identify that, then you'll be able to know that whenever there is a retracement, how far is the market going to retrace? So if you're moving from point A to point B, you want to know how far is the market going to retrace before continuing back in its original direction. Let me show you exactly what we mean when you're using this strategy. So as you can see right here on our chart, right, we can establish that from this point right here all the way up to this point, the market was moving upwards, right? So in other words, the market was in an uptrend, right? So this market structure is called an uptrend market structure. So you would want to be able to trade in line with this uptrend structure. So where does the Fibonacci tool come in now? Now the Fibonacci tool is there to come and help you measure, okay? As you're going up, it comes to help you measure these retracements and tell you when the market is going to stop retracing and continue going up, okay? So you want to be able to know exactly this point, okay? You want to be able to know this point, and you want to be able to know this point. You also want to be able to know this point, because these are buying opportunities, right? You're in an uptrend and you want to get an opportunity to jump into the market each and every time each and every time it retraces, right? So that you'll be able to pick up its direction. So these lower highs, that's what you want to be able to pick up, and the Fibonacci 2 is able to help you pick up that. So let's take an example and see. First of all, I have to explain to you these numbers, right? We are mostly interested in, this is the 0 level, right? The 25 level, that's when our retracement starts. So if the market retraces to the 25% level, then we can start counting it as a retracement, right? And with the 50% level, now that's where we want to see if there is a possible turn. So we're looking for a possible turn at the 50% level, at the 61.8 level, and at the 78.6 level. That's where we expect the market to be turning. So if my price gets to the 50% level, I'm most likely going to think it's going to turn. And if it gets to 61.8, that's another chance. And if it also gets to 78.6, those are my three levels that I'm expecting price to get back to and then continue in its direction. Okay, so those are the explanations. And if it gets back to 100, that means it's a complete turnaround, right? And then we've got the minus levels here, which give us our take profit level. So basically, we're saying if price then gets to minus 27 or minus 61.8, then we are taking profit at that level or at the 0% level. So let me put it into practice, what I'm talking about. Let's take a look at the recent example that we have. So right here, I can establish that this was my higher high, right? And this was my higher low. Remember, the general direction of the market is in an uptrend, right? So generally, I am looking for uh, buying opportunities. So how do I find these opportunities? Where exactly do I jump in, or when exactly do I jump in? I'm simply going to do this. Once I have those 2 points, right? My point A and my point B, I'm going to draw my levels. So let's say from this point to this point. So my market moved from this level to this new high, right? And then now I want to be able to know if it's going to retrace, when exactly is it going to retrace? So you can see that when it got to this level, it started to pull back down, right? Started to push back down, down, down like this, up until it got to my Fibonacci levels, which is the 50 level or the 61.8 or the 78.6. In this case, it was between the 50 and the 60. And you can see that I will be able to get a buying opportunity from that level, right? Means that once I see that my price is now in my Fibonacci levels, then I am able to actually pick up some trades, which means that I was going to be able to buy right there. Okay, this is just by using Fibonacci tools. So I'll just be waiting for my price to come back to my levels, and once it does, then I enter my market, right? So after this, we can actually draw another Fibonacci level there, so that we'll be able to pick up the next one. So I'm going to start from there all the way up to my last point. So here I'm measuring this movement, and I want to see how far my market is going to retrace down here. And you can see, first of all, we have to pass the 25% mark, which qualifies that we have actually crossed, we have actually started the retracement. And then once we are below that, then we know that either the 50 or the 61.8 will be getting a trade. And right here, you can see price then bounced at the 50% level. And then it pushed up a little bit to our 25% mark before actually reversing. But that's how I was catching trades using this simple price action principle. Okay, so it works in both directions, whether the market is going up or it's going down. Let's take a look quickly on an example where the market is actually going down, so that you guys can actually see. So you don't have to force retracements. Remember, you just have to pick one and see if it qualifies or not. If it doesn't qualify as a retracement, leave it and then move on to the next one. So in this case, I'm saying my price started off here and ended off there. And you can see price bounced exactly at my 61.8 level, which means I was going to be able to pick up this trade this sell trade using the Fibonacci tool because we were right at the 61% level. Okay, once again, the indicator was right in that case. Let's take a look at another example, right? Let's use the same example in continuation. We start from there and we get to this level. Now, in this case, you can see the price got to my retracement, but it did not end up going to the 50% level, which I want, which is around this region between the 78.6 and the 50%. So that one could not work out. So nonetheless, we move on to the next and see if we can get an opportunity. So I'm going to start from there and I'm going to extend like this. And this time around, you can see that it actually worked because we're going to be able to see that bounce at the 50% level and price pushed all the way down. I'm going to be giving away free signals this October. And all you have to do is to like this video, comment down below, and send me a screenshot to my WhatsApp number showing me that you have done all the steps. And I'll be able to add you to that group. It's completely free for all the comments and for all the commenters in the comment section down below. And if you guys have any questions on this strategy, or if you want me to elaborate further on, feel free to ask in the comment section below and you'll be able to expand this strategy furthermore. You'll be able to find my WhatsApp number in our free Telegram channel. The link is in the description box below. Just click it and it will take you straight to our free Telegram channel where you'll be able to see my number, see my trades, and you'll also be able to learn a lot of things that I'm talking about here. Okay, so once again, let's take a look at another example and see if this strategy is actually that powerful. Okay, so all I need to do is to find 2 points and then I'll be able to know if I made a retracement. In this case, there was no way we could have picked up the trade because we didn't have price getting into this zone, so there was no trade right there. So I'm going to delete this and I'm also going to delete this, and then we're going to start again and look for another opportunity where we price actually respected this indicator. Let's take a look at this example. Okay, let's say price moved like this and to this point. Now in this case, you can see that price then came back to our 50% zone and then our 78.6 zone, and that's where price bounced, which means that we could have managed to catch this trade from here all the way up. Remember, our take profits is firstly 0, then minus 27.6, then minus 61.8, of which all the levels were reached in this example. So if you guys have any more questions about this, feel free to ask me. Until next time.